Hello guys, welcome to the Trading Parrot. We're almost 41% up in November and price action is right below 100k, confronting the largest selling wall in the past 3 years. There's nothing that even comes close, as you can see in here, with almost 300 million of ask liquidity precisely at 100k. In yesterday's video, we also talked about the potential for a gamma squeeze. Indicators are going crazy at the moment, and most people are going to miss out on what they are trying to tell us. And today is Friday, and we are hours away from closing on CME, which makes things even more interesting. We really need to talk about what's going on at the moment under the hood. Most people are just looking at the price, but they have no clue what they're trying to hide from you. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And the past 4 videos have been almost all getting very close to above 400 likes. I really appreciate if you can hit a like to this video as well, to continue to keep you updated, not just with the long-term information, but also with the time-sensitive calls, like for example yesterday about the gamma squeeze. It's been an incredible November so far. There's only 1 week left of November, and precisely at the end of November we are getting new moon once again. There has been a tendency during this bull market for full moons to help the price to rally. Not all the time, but I will say over a 60 to 70% of the times we see a rally. We can say that more than half of the new moons have on the opposite side helped for the price to stay going sideways and sometimes to see some corrections. If my calculations are right, we should be getting a new moon at the end of November. That is one of these red ones that you can see in here. If you ask me if I believe or not, I don't believe in anything. I just observe data, and if I see a trend, I use it. If the trend breaks and the alpha doesn't work anymore, I don't use it. As simple as that. At the moment, the price on CME is 98.9, and as with every weekend, it's a great starting point, at least for the short term. I'm talking about next week, to close CME the highest price possible. Indeed, it will be awesome to have a rally on the closing price of Friday, potentially above 100k, just because if over the weekend we start having a pullback, then we will leave a CME gap at the top, and that could really help the price then to come back above 100k. On the opposite side, if before we close on CME this evening, the price starts having a pullback to 95k, and then over the weekend we start pumping above 100k, then that will become a pending task that has a high likelihood of bringing us back down. Sure, during rallies, November, December, and January, we have seen in 2020, 2021 that we left CME gaps up until the first correction in May of 2021, which is equivalent to waiting until May 2025 for closing those gaps. But at the same time, we have already accumulated 3 pending CME gaps that haven't been closed. One at 20 in early bull market in 2023, one at 54, and one at 77k more recently in early November. So we are reaching a point where we really, based on past performance, cannot accumulate so many more CME gaps unfilled for very long. So it will be nice to just keep it at that number of 3, just to keep the statistics happy. As you can see in the 4-hour time frame, the RSI seems to still be in a very intense move up. If we had to criticize what's going on at the moment and find something slightly bearish, is probably just this bearish divergence that we are putting in here with a lower high that we put today at 5 AM. You can see as well that the median is very fast now moving up. That could potentially be support at an RSI of 66. And of course, as well, we have the support at 64 provided by this trend line. If we want continuation of this uptrend on the 4-hour, we should be seeing a move like this, and then hopefully we get a higher high eventually, or in the worst case scenario, we go to 65 support from the trend line, and then we still put a higher high. That is probably what we are gonna see if we end up breaching the selling wall of 100K. If that arm wrestling proves to be too heavy for Bitcoin, at least in the next few days, then we could be seeing a breakdown below the 65 RSI. If we were to break that 65 and there was some sort of decent correction, then we no longer have the support at 37, but now it's a little bit higher at almost 40, depending on the speed of that potential breakdown. So if we come and we continue with this trajectory, assuming a bearish breakdown in here, 40 could be the area or the vicinity in here where price could fall to. Remember that the upside remains somewhere at the 87, so we are going to look at 87, 40, and 65 for the support in the price. Let's change this from 38 to 40, and then the 65 for that support. Let's go back into the price, and you can see that we have been very close to testing that 65 RSI, which is currently located at 98K. At the moment, we are at 98.6. and so far holding that support. As I explained yesterday, the RSI targets are moving targets. Whenever the price comes down and somehow resets partially the RSIs, then our targets go higher for the top of the range. And whenever we are moving up with the price, our targets of 87 RSI starts coming towards the price. Therefore, the longer we take to hit them, then the lower is our potential final target. It's very interesting. Let me know in the comments if it's making sense. At the moment, we are seeing a red candle, and that is pushing the target from 110 to 113. So 3K further up thanks to this move down. And that's why I mean every time we reset the RSI, we can get higher in the price if we reverse back up and we regain strength, of course. It's assuming that. At the moment, our target of 87 RSI is at 113K. At some point, it was getting at 109. So it's constantly fluctuating, and it will definitely depend on what comes next. We have some fair value gaps in here in the close proximity, but I will say that this one, the first one, is already gone thanks to this wick to the downside. So we have the 95K left there. Our support, if we saw on the 4-hour a crash, breaking that support of 65, there is a likelihood to go to the 91K. Which seems completely undoable. And if we break in here, the problem is that at the moment we are in such a strong uptrend that you need to be very careful with shorting a move like this, because even if you break down, it could be a fake out and continue to the upside right after. So use risk management, stop loss, DCA, hedging, and prepare for that scenario if you want to short it. It can make a total sense because this on the momentum could be a move like this. It will make absolutely sense. It's not crazy to think that something like that could happen for a full reset of the RSI, and then potential further upside to come after that could be extremely bullish, because we can take a long from here all the way to the top of the range. But again, I'm not assuming we're gonna break down. I'm not assuming yet that with the breakdown, it's guaranteed we go to the bottom. So if you take the short, protect it. And if you are right at support, it could also provide a great entry for another long. Just be aware that we have that huge liquidity sitting at 100K. So you're trading a pretty complex scenario at the moment. And an update on the daily, very interesting, because yesterday we were talking about the potential for closing as a resistance below this trend line in here, with potential continuation to the downside, so we can define our channel down. Then we use this trend line against that line, saying that maybe that is the resistance. But there has been so much strength on the daily time frame that it actually closed above both of them. So this is a very interesting but non-tradable breakout to the upside, because we are at 81 on the daily and trading a breakout to what target? To 86, and assuming that you're gonna break above that, it's really crazy to go long in here. Because 1, 2, 3 times we have not managed to go beyond these trend lines of the highs of every peak in this bull market, and they're supposed to be diminishing. So this is your upside, and I'm not saying the price cannot go higher. Please don't get me wrong, we can go to 200k. That is doable. What I'm saying is momentum is at the very top in here, so it needs to cool down, it needs to come back down and find somewhere in here some peace before it can hit again the ceiling. And the longer you cool down that, then the price can expand way higher. So at the moment the RSI is at 82, and my thesis is that it cannot go beyond 86. So we have just 4 RSI levels to go up. So we are at 82 and we are talking about getting into 86. That is at the moment 105k.3. If we were to see a full reset on the daily, and that reset came back down to this trend line, that will be a journey from 82 coming back down somewhere 59, I will say, depending on the speed, 59 to 60. That will be an interesting way of resetting the RSI that could start from where we are, or possibly from 105k. Let's say 60. 60 at the moment is right underneath 90k. So that will mean that the price that's something like this and it hits that 90k, or it goes and it hits the 105, and maybe after that it cools down back down. But there's something that is not really making a lot of sense. We have that selling wall that is increasing today closer to the 300 million, and if we break above it, there is a chance that the market maker, due to all the options calling for above 100k, they might need to enter into hedge mode, creating an inverse snowball effect, which is the gamma squeeze, where they have to buy in futures to hedge, and indeed everybody ends up buying, causing that the price goes way beyond. What RSI is saying is that at the moment that is not doable, that 105k, that is the wall and that is it. The gamma squeeze theory says that if we enter into that, we should go way beyond that. So it's a really tough one right now, which one is a heavier argument, and then go with the if we break 100k, we stop at 105, or if we go above 100k, then RSI, screw RSI, we don't care about it, we just care about the gamma squeeze, and let's close our longs up until 130. I think regardless of the outcome, if we happen to cross 100k and I'm still in a swing long, I'd have to be monitoring very closely my position, and I will definitely not go to sleep with the position open, doing all those things at the same time. And so far, my forecast of the open interest in the past year getting into 32.2, which is the 1618 expansion of the Fibonacci from the bottom in here of January to 73.5k, then to this bottom, it takes us right there. And so far, we've been 2 days respecting that forecast. I think I have very low likelihood of getting it absolutely right, but if I do, it will be great to know that that is our ceiling for open interest, at least in the short to medium term. Then we can start using this alpha and calling for the best swing trades that you can ever find in any other YouTube channel for Bitcoin. Look at the precision of these times. You can short every peak in here and every bottom, and pretty much you get over 20 to 30% swings, which with a little bit of leverage in this ranging period, you can outperform what you get in the most impulsive part of the market, if you just count every swing as a successful one, of course. And distribution remains in November very similar to what we can see in November 2023. I am hoping that we see a cool down in there, big whales starting to withdraw once again. Long-term holders are doing precisely what they were doing in the sell the rip of 2021. You can see that roughly 18th of October, they started selling the rip consistently until they get to the peak. And they are doing that, and interestingly, this is about to get to the levels of accumulation of July. Around December and November in the previous bull market, they will have already gone beyond what they accumulated in March during COVID. So it's not out of the ordinary, this behavior. They accumulated in the bear market most of it. They accumulated some in the year prior to the final push up. And as soon as the push up starts, they consistently sell the rip. And if we focus on this cycle, you can see accumulation and then distribution, a bit of accumulation during the megaphone pattern, and then once again distribution. There's been some liquidations with these moves recently, but if we break above 100k and then we go to anywhere above it, and if we don't manage to hold above 100k, I will expect that this report is just gonna have tens of people losing over 1 million longs and shorts. The scalping chart is not really helping that much when we look at it from the distance, so I'm gonna focus just on the most recent price action to see what are the levels that are standing out. There's not many shorts that have recently entered, and 91k is the first substantial level, but the biggest one is 88k, something to keep in mind. And on the longer term, after we have consumed all the red, if we try to take out this from the screen so we can focus on the longer term accumulations, and something very interesting is popping up, which is the 74k. 71 is quite heavy, nothing overlapping with the CME gap yet. Usually we get a huge overlap here, which is very interesting why it's not happening. Then we have 84 to 81 heavy, and the first one interesting is 88k. 91 is there but is very humble. Above the price, of course, we have all the liquidations from people that are constantly shorting up until 101k. Above 101.5, we go low in liquidity, and the liquidity resumes heavy above 105, ending at 107. Very interesting that they are putting the risk above 106 to 107, kind of preventing in case it gets to 105, which is a level that was resonating in the beginning of the video and in my past videos for quite a while. Notice this new level that is quite far. I wasn't expecting in November to be talking about 120Ks, but here we have an early liquidation forming at 117K. Let's look at the delta because it's been really great alpha since August at the very least. And I can see now that the longs are getting to an area which is definitely above the median and pretty much above the top end. So we only have a few instances where we get this high in the full chart. The thing that we need to monitor is not precisely the top, as you can see. For example, this is one top, this is one top. Focus on what the price is doing. When I move the mouse, that top of the longs, this is top of the longs, that is top of the longs. And as you can see, not always that marks the top, but that is the point where longs start stepping away from the long positions and the ratio starts balancing more into shorts entering. And in that transition from most being longs up until you get to most being shorts, it's the sweet spot where you exit your long, basically, with some exceptions. For example, in here you have a perfect coincidence that the longs started marking a peak where the price also gave a peak. But I have to say that's not always the case. You have some examples. There's also this one and this one. But in a strong uptrend, longs start pulling out and the trend continues even though they mark the top. So at the moment, we may or may not put in a top on the longs in here. And as I say, that doesn't necessarily need to be the top. It could still rally slightly more. What we do know is that if this thing starts coming down heavily like this, even if the price goes slightly higher, and eventually it's gonna start coming down too. So I'm gonna monitor what's coming up here with the longs, and we definitely care if this is going to do some sort of breakdown there. Those two things are important, and I wanna see how we continue in the evening update or tomorrow morning, Saturday update as well. Remember, my expectation is right there documented. I am calling for at least a liquidation of that size from longs. That is relative to the amount of shorts that we got liquidated. And the timing, I don't know really, but let's just assume it's going to happen, I think somewhere in here. I'm gonna call for 25th to 29th of November. I'm gonna use the moon phase maybe. And let's go into the selling wall. I know many of you are pretty much by the hour asking me what's going on. And at the moment we have $285 million in selling wall. This is just Binance, guys. I know that if we did an aggregated selling volume from all exchanges, we can get way beyond that, but I'm just using Binance all the time and I get a way to do relative comparisons against the past, which is what I'm looking for, so I can understand what can happen and what is low likely to happen. And as you can see now, we are looking at the 3-year chart. We normally look at the 6-month chart to do the calculations, but as you can see, if we focus on this area in here, we get the first time almost 300. This is 292. I got the wrong reading. I remember it was almost 300. And if we start going in the past, you're gonna find all those levels that we were moaning about. Remember, 81 million, 100 million, oh my god, 63. Then early this year we have 134 million, and in here 85. Guys, this is almost 3 times the largest one. So definitely it is something. And when I say it is something, I'm not saying that is enough to stop the price. I'm just saying that for whatever reason that thing is there, whether to scare people, psychological reasons, to spook the market, whatever is the reason, to make you believe that Bitcoin cannot go beyond 100K, there's an endless list of reasons, right? But I'm just monitoring it because it's going to be very interesting if the price hits that level. What's going to happen? We never seen that in Bitcoin history, and definitely part of my outcomes includes manipulation, and it's most likely manipulation, but how is it going to play out is extremely interesting to me, given that the whales, as you can see in here, the largest ones continue to sell. The purple ones that are typically leading what the price is going to do after are at the moment just flat. Liquidity below the price at 93K on this chart, though the largest looks to be 89K. Fair value gaps all over the place. We got now from 97 to 92, a decent accumulation in here. And then we have the usual vacuum from 92 to 85K. And this is very important. This is ask liquidity. And I want you to focus on how much ask liquidity we have ever had in the past and what could be the effect. Always think that we cannot compare this side of the chart with this side of the chart because this side was within the megaphone pattern and we were just going sideways. So what we need to use to fully understand the effect of this amount of selling going on in here, this is not effective selling, this is ask liquidity. Limit orders above the price at record highs, expecting to get filled or to get pulled out in the best scenario for the longs. But if they get executed, they can have a similar effect to what this bid liquidity had at this bottom, which is to take the price up. If all of this gets executed, it can take back the price a good amount. Personally, I'm really liking to use confluence of big green areas where there is a lot of bidding with other indicators, with a strong breakout from RSI, liquidation levels being above the price, etc. I don't like to be entering along when most of the people are placing limit orders to sell, because although it can be manipulation, the risk is just the highest that you can afford. And I got some cool news. This is not a mind-blowing news, but it's a good development, because even though you hear constantly the Fed saying that they are in quantitative tightening, you can see that their balance sheet here is growing, okay? Not at a huge fast pace, but it did a breakout that we were monitoring for months, pretty much since early this year. When we broke down, we were looking for a breakout to the upside, and we finally have it early November. We came for a retest, and now we have a higher high, and that is good. Of course, it's not as exciting as seeing this parabolic increase in the balance sheet, which definitely helped Bitcoin to rally like crazy during those times, but it's another small step in the right direction if you want. Global liquidity index is still in a low, not putting a lower low, which is okay-ish, but very close to put a double bottom. Liquidity in China hasn't increased dramatically. Dollar is breaking above the next resistance at 107. This is just going crazy to see Bitcoin at these prices, almost 100K, and seeing at the same time the dollar pumping above 107 is just completely out of the books. You're gonna struggle to find any past performance on Bitcoin where these two dudes are competing with each other for so long. And remember what I say, that by the end of November, around 2nd of December, I have my thesis that dollar is gonna top. I have covered that in too many videos, and these videos are already getting too long. Many people are gonna complain it's too long. So I'm gonna just cut it here with the gold that is also making a move up, printing an engulfing red candle on the weekly, which is definitely influenced by geopolitical developments this week. Call it people are getting scared, and gold is having another pump. That is also not good for Bitcoin, considering that Bitcoin is a risk-on asset. Now there is a transition now of Bitcoin going out of that risk-on asset in potentially becoming kind of what gold is, in which case a rally of gold with a rally of Bitcoin one day, potentially in the short to medium term, people might start seeing Bitcoin also as a risk-off asset. We'll see. And just as a final two gems that are also calling for a local top on Bitcoin, we have the RSI monthly getting very close to the trend line at 78, 79, which is the yellow line in here. And at the moment that is at 111K. It is a moving target, so with the price it's gonna move. And if we close November like this, then that price is also gonna change with the new candle in December. So make sure you're subscribed to the channel so we can keep track of that moving target. And in my controversial video calling for 105K being a local top, we are again getting closer and closer to that trend line. We are at 0.39 and the trend line at the moment is located at 0.40, so just 0.1 away in this oscillator to just touch that local top. And this indicator is a win-win situation for me in terms of my emotional outcome of whatever we end up seeing on the price. If we see a rejection in here, it will mean that my oscillator remains 100% perfect performance throughout the whole stupid history of Bitcoin, which is really great. And if we break out here and we retest and we start continuing like that, and we enter into a new stage of Bitcoin history, that breakout could also call out for something out of the charts, making me hold my Bitcoin for way longer. So I think whatever is the outcome, I'm not gonna remove my eyes out of this chart in the next weeks. Impossible. That's not gonna happen like it happened in here when it was calling for the bottom too. So make sure that you're subscribed not just to the channel, but also to Telegram, Instagram, and Twitter to stay up to date with all of these developments. Guys, if you want to trade on an exchange top-notch, great performance is what I get from Bybit. I use it to trade with my trading bots, manual trade, and if you use the link in the description to open a new account, you can get up to 30,000 in rewards based on trading volume. You can also get very low fees by using that link. And if you're sick and tired of using exchanges that are constantly asking for KYC, takes so long to get approved, sometimes they even tell you no, that's it. You need VPN. You cannot withdraw, you cannot do anything. If you don't want any of that garbage, have a look at Bluffing. This exchange doesn't require KYC, VPN, and you can use it anywhere in the world. No questions asked. You can open as many accounts as you want. Indeed, I have 2 accounts with 2 separate emails. I have never done KYC with them. I didn't need to withdraw deposit crypto, which is all I need. And they give you access to leverage trading with Bitcoin and altcoins. Thanks so much for watching. I'll see you in the next one. Take care. Bye bye.